The content of this podcast is provided for informational and educational purposes only and should not be construed as financial, investment, legal, or tax advice. The views and opinions expressed by the host and any guests are solely their own and do not reflect the views of any employer, firm, or affiliated institution. Any examples or strategies discussed are general in nature and may not be appropriate for your personal circumstances. Always consult a licensed financial advisor or other qualified professional before making any financial decisions. The host and production team assume no liability for any loss or damage resulting from reliance on the information provided in this podcast. How's it going, everyone? Welcome back to Trajecta Talks, the podcast where we dive deep into the tools, mindsets, and disciplines that give you a sharper edge in finance, business, and life. I'm your host, Alex Savanovic, and I'm thrilled to have you with me for the official first episode since the last episode was technically just an introduction. So, whether you're listening on your morning commute, hitting the gym, or just chilling at home, thanks so much for carving out some time. So, quick intro for the new folks. I'm a finance grad from the Sauder School of Business at UBC, and I started working at a hedge fund when I was just 19 years old, still juggling classes, and I'm still with that same fund many years later. It's a firm that's been delivering market beating returns for nearly 3 decades. I trade across asset classes, stocks, bonds, options, you name it. I build models to turn data into strategies, and I spend a lot of time in our private book evaluating startups, structured deals, some debt stuff. I've been lucky to get hands on experience across every part of the business, trading, investing, private equity and debt, some of the deal making, all of which gives me a front row seat to how money really works. And today, I'm bringing that perspective to you to help navigate the financial chaos of student life. Now, before we dive into the content, we have to give you the market updates from this week. This is your unfiltered weekly download straight from the desk, cutting through the noise and getting to what actually moved the needle. And trust me, it's been a ride this week. So let's peel back the layers on the action from this past week. First up, let's talk about the big money moves. We were in the thick of it with Oklo. That's ticker symbol OKLO. That was today. This nuclear play has been on a tear, and they just dropped major paperwork on a massive $400 million at the market offering. That's a green light for them to hit the street, raise serious capital when the timing's right. And the stock popped hard out of the gate this morning, showing that the institutional appetite for next gen energy is red hot. While it gave back some of those gains into the close, make no mistake, this name has been a monster, up over 100% in the last 30 days. Analysts are already chasing it higher. Go figure, right? And speaking of blocks, we were also in on the Karo deal. That's Karo. That was the secondary today. This wasn't the company selling shares, but their CEO, Zach Callisto, offloading about 1.5 million shares at about $50 a pop. That's $75 million coming off the table. So KARO's solid cloud play in fleet and logistics, doing big business globally, and it's been a major performer, up nearly 70% over the last year, trading right near its highs. The CEO still got a significant skin in the game, holding north of 58% after this. Good to see liquidity coming into these names. We were honestly super happy to participate regardless. But this week, the real fireworks belong to Voyager Technologies. That's VOYG. This space and defense tech play landed on the New York Stock Exchange, I think Wednesday. They priced their upsized deal at $31, but when it hit the screens, boom, Voyager ripped more than double, opening at 67 and shooting as high as 74, I think, before settling back around the mid 50s. Still up 82% on the first day. This isn't just another tech IPO. This is a defense darling. They've got NASA, Palantir, Lockheed Martin, the big guns as customers, and they're even building the Starlab commercial space station that you've probably heard of. They're still burning cash with some escalating losses, but the market's saying loud and clear demand for space and defense plays is absolutely insatiable right now. It's a huge signal for the whole sector. Now let's pivot to the macro. All eyes were on the 30-year Treasury auction today. The Treasury drops $22 billion on the market. The read, it was solid, but not a showstopper. Foreign demand was a little softer than average, but the domestic bidders stepped up big time. The key here is that they sold all the paper without a hitch. The yield they locked in was 4.844%. It was actually better than what the market was flashing before the auction. That means the Treasury is borrowing money a tad cheaper. The 30-year yield, which started the day off about 4.9, actually eased off to 4.839 before the prints. So while it wasn't an absolute home run, it definitely calmed the nerves around longer-term bond demand. Now, speaking of calming nerves, the US China talks continued. This week, we got news of a rare earth deal coming together. And after all the saber rattling and export curbs, I feel like this is a big win. It means the US gets better access to those critical minerals that are used in everything from EVs to fighter jets. It's a positive step in chipping away at those trade tensions that have been hanging over the market the last few weeks and months. On the bond side, more broadly, treasuries were a bit soft for most of the week, trading sideways to down. But then came Wednesday's CPI print. Inflation came in softer than expected. Boom, those bonds got a serious shot in the arm. The 10-year yield dipped hard, coming down to the 4.4 area. That's a welcome sign for fixed income. And by extension, it gave equities a really nice boost this week. And of course, let's not forget the political theater impacting the tape. Early in the week, the perceived rekindling of the relationship between President Trump and Elon Musk seemed to juice sentiment. When those two are playing nice, often sends a positive ripple through the market, especially for Tesla stock. And we saw that help lift things in the first couple of days of this week. Finally, the big tech print from last night, Oracle, ticker ORCL, they dropped their numbers after the close yesterday, and the stock ripped over 13% higher today. So why the pop? Simple. Their cloud numbers were strong, hitting the top end of hitting the top end of the guidance. The real kicker was the remaining performance obligations. That's RPOs. If you looked on the transcript, they projected it to double to a mind-boggling $275 billion by fiscal 26. That's a massive forward indicator of OCI and AI deal momentum. And yes, the CapEx was higher than expected, showing they're spending big to meet demand. And profitability might lag a bit short term, but the market's looking right past that. They see the AI pipeline, they massive cloud wins, and the clear trajectory for growth. Oracle is all in on AI infrastructure, and investors are buying the story. I couldn't tell you the last time anyone cared about CapEx. It's quite wild. All right, folks, that's the drill for this week. Fast, furious, straight to the point. Next week, we will have another market update. So let's get right into today's episode. So today's episode is called College is Expensive. You don't have to be. Let's be real. Being a student in 2025 is a financial gauntlet. Tuition is skyrocketing, rent's eating half of your income. Textbooks, if you have a lot of them, cost as much as a used car in some cases. And don't even get me started on those late night Uber Eats orders. With inflation outpacing what most part time jobs can cover, it's easy to feel like you're drowning before you even graduate. So, how do you stay afloat while building a future that you're proud of? That's what we're unpacking today. We'll break down the mindset, strategies, practical steps to graduate with confidence, not regret. This one's especially for university students, but the principles apply whether you're in your 20s, 30s, or beyond. Let's dive right in. Let's set the stage. College is one of the biggest investments you'll ever make. Time, energy, a whole lot of money. The average Canadian student graduates with about 27K in debt, and in the US, it's closer to 40. Add in rent, food, other costs, and you're looking at a system that feels so rigged against you. But here's the truth: financial stress doesn't have to define your college years. The difference between graduating with options and graduating with regret comes down to discipline and systems. Not talent, not luck, just habits that you can start building today. At the fund, we don't just throw money at opportunities and hope for the best. We analyze, plan, manage risks. That same mindset applies to your finances as a student, whether you're scraping by on a part time job or leaning on student loans. The goal is to make every dollar work harder. And today, we'll cover the traps that sink most students, the mindset shift that creates freedom, a step by step guide to budgeting, the psychology behind bad spending habits, and creative ways to stretch your dollars without feeling deprived. Now, let's start with what most students get wrong. I've seen these traps firsthand, not just in my own life as a student, but in the patterns of interns and new hires at the fund. These are the mistakes that keep you reacting instead of building. First trap, thinking budgeting is just about cutting the small stuff. I know you've all heard the cliche skip the $5 latte and you'll be a millionaire. That's absolute nonsense. Cutting coffee doesn't solve a $1,500 rent bill or $50,000 in loans. Real budgeting focuses on big expenses. That's your housing, tuition, maybe even transportation in some cases. Uh, and it builds a system around those big things. It's not about guilt tripping yourself over a treat. It's about clarity and control. Go buy the friggin' cookie if you want to eat the cookie. Second trap, living on financial autopilot. Too many students only check their bank account when they get an overdraft alert. They hope their student loans last the term, send Venmo and, sorry, not Venmo is more in the US, but they send e transfers without checking balances or assume things will just work out. That's not managing money, that's just barely surviving. And without a plan, you're at the mercy of every single impulse or emergency. Third trap, treating student loans like free money. Loans feel like a lifeline when they hit your account, but they're a contract. The second that you graduate, that 20,000 or 40,000, it starts to accrue interest and payments kick in whether you're ready or not. I've seen so many grads blindsided by this because they didn't plan for the long game or really the future at all. Last trap, thinking financial discipline starts after graduation. Let's be so real here, guys. If you can't manage 500 bucks a month now, you will not magically handle 5,000 or 50,000 later on. Your habits, they scale, and the choices that you make in college, how you spend, save, or borrow, sets the tone for your 20s and beyond. So get this right early, spend the time on it. You're building a foundation that's going to compound over time and you'll really reap the rewards later on in your life. Let me share a story from my early days at the fund. I was 19 years old, still in school, obviously still a student, yeah, and I was making similar mistakes with my own money, spending without a plan, never budgeting, assuming I'd figure it out later. And it wasn't until I applied the same rigor that I saw at the fund, tracking every dollar on a spreadsheet, prioritizing my biggest expenses, that I started feeling way more in control. Not completely in control, I was still far away from that, but I was feeling more in control. And that's the mindset that we're trying to hammer home today in this episode. Here's the key to getting this right. Discipline isn't a cage, it's power. A budget isn't a list of don'ts, it's a reflection of what matters to you. Your priorities, your goals, your future. When you have structure, you get this sense of a bit more clarity. It'll translate into a lot more confidence. You'll avoid feeling anxious about your finances. Before you know it, you'll have some great momentum and you'll be building some really great habits. Now take this example. Imagine you've got 1,200 bucks a month from a part-time job and some family support, and if your rent is 800 bucks, 800 bucks a month, you don't just have $400 left to play with, quote unquote. You need a system to allocate every dollar. A simple framework like the 50/30/20 rule can really help. That's 50% for needs, that's your rent, groceries, transit, tuition, 30% for wants, although I would say that's a tad high. That's social stuff, clothes, entertainment, and 20% for savings or debt repayment, even if it's just $20 a month. And if you can't hit those exact ratios, no stress. The point of this exercise is knowing where your money's going, tracking your spending, even imperfectly, puts you ahead of 90% of students. We just want to know where the dollars are going and not just tapping the plastic whenever we feel like it. And this mindset isn't about deprivation, it's about building a life where money serves you, not the other way around. Your budget is essentially your thesis for your financial life. It's how you take control in an uncertain world, especially one where inflation has been on an absolute tear the last few years. One of the best ways to take control is to build a very simple budget in Excel or Google Sheets. And this isn't just about numbers, it's about building a habit that sticks. So here's how to do it step by step. So first thing you're going to do is open a new spreadsheet, create a table with four columns. The first one, category, budgeted amount, actual amount, and difference. In the category column, list your income sources, part-time jobs, scholarships, student loans, family support, or side gigs like tutoring. Then next over, in that same column, list your expenses, splitting them into fixed and variable. Fixed costs are things like rent, tuition, or internet, stuff that doesn't change month to month. And variable costs are groceries, eating out, or entertainment. Those are the things you can control to some degree. Next, set a budgeted amount for each category and be realistic. If you know you spend $150 on groceries, don't budget $100 to feel frugal. Then, as the month goes on, track your actual spending in the third column. Subtract budgeted amounts from actual amounts and see how you did. I personally found some areas of my life that I was great at underspending, and other areas, like eating out, I was consistently going over month all the time. And it's nice to see at a granular level where you need to focus. This gives you a great snapshot of your financial health. Now, you don't always have to do this, but something I started doing later on, add a savings row and treat it like a bill. So pay yourself first before you pay anything else, even if it's just $10 a month. That habit builds discipline. You can also use conditional formatting. Make that column green, or make the columns that you're under budget green and red for over budget, to make it visual and easy to spot the issues. Review this every Sunday for 15 minutes. It's not about perfection, like I said, it's about consistency. It really takes no time, and all the effort is spent at the beginning just building the sheet. If you guys really want, I'll build you a template just to help you guys out. All you have to do is hit me through the various channels. I'll link it in the show notes, or I'll send it even to your email. And if spreadsheets feel like way too much work, there are tons of apps that can automate some of this, but I highly recommend building your first budget by hand. It forces you to feel the numbers, not just swipe through an app. That feels a bit superficial, in my opinion. If you do want to know some of the apps that I personally like for budgeting and you really don't want to make your own sheet, feel free to hit me in the comments or DM me on any of our socials linked in the show notes. I'd be happy to help you guys. Now, let's talk about why budgeting is so hard. Psychology. Most students aren't blowing their money because they're reckless, they're chasing feelings. Emotional spending is so real. If you're feeling sad, we can order takeout. If you're bored, we can buy clothes. If you're anxious, add more to your cart. Social media makes it so much worse too, showing you everyone's highlight reel, new phones, fancy dinners, exotic trips. It's really easy to feel like you're falling behind and that you're not keeping up with these lavish lifestyles. And then let's not forget about FOMO, that's fear of missing out. Let's say you go on an Instagram story, your friends are out every weekend posting about concerts or new gear that they bought, and you feel pressure to join in. But here's the reality. Most people flashing wealth are one of two things. Number one, spending way more than they should. Or two, they come from affluent means and maybe they can afford to spend in this manner. Everyone comes from different means. And honestly, we aren't all born financially equal in this world. All that's important is that we build a system that fits our needs and our means, and that it works for us. Real wealth is the freedom to make choices without financial stress. And that's what we're working toward, even though we might not be there today. And when I'm trading every week, I see this in the markets all the time too. You have retail investors chase hot stocks because they're afraid of missing the next big thing: quantum computing, crypto, AI, whatever the thing is for that week. But the disciplined guys, they stick to their process, they ignore the noise and win in the long run. For you, that means asking the tough questions. Would I buy this if no one saw it? Is this about approval or my actual goals? And what would my future self say? Saying no takes courage, but it's how you build real financial freedom. Now, earlier I said I was going to share a story. I never really got to it. So let me share this moment from my own life. When I started at the fund, 19 years old, I was making some decent money, especially for a student. I was still spending like a complete dummy, late night food runs, new gadgets, you name it. I thought I was fine because I had legitimate income, and I was on autopilot. Let me just be so honest. One month I overspent by $1,000 without even realizing it. And that was such a wake-up call. I started tracking every dollar after that. No different than how I track things at work or where we're spending money at work. It's not glamorous, but it gave me control. And that's what I want for you guys: control and not regret. Trust me, you do not want to see most of the credit card statements I got in my uni days. Now, let's talk about stretching your dollars without feeling like you're giving up everything. This isn't about cutting fun and living like a monk, although that would be super cost effective. I know it's not ideal. It's about optimizing so you get more value from every dollar spent. So here are 6 strategies to make your money work even harder. Number one, think about splitting big costs. Housing is your biggest expense. Rent, utilities, Wi Fi, furniture. Sharing these costs is a game changer. Instead of spending 1,400 bucks a month for a solo apartment, although uh, I don't think that's maybe a realistic number. You could pay 850 with another roommate or 600 with two roommates. That's thousands of dollars saved over a year. And don't stop just at the rent. Split grocery, bulk buys, streaming services, ride shares. At the fund, we pool resources for big investments to reduce the risk. And you can do the same with your expenses. Team up with your friends and make your money go a lot further. Number two, buy used. Get over your ego. Used doesn't mean junk, it means value. Textbooks, laptops, furniture, even clothes can be found for 50 to 90% less on platforms like Facebook Marketplace, Kijiji, Craigslist. There's tons of student buy and sell groups. A super expensive pair of shoes could go for 50 bucks on one of these sites. Older textbook editions often have nearly identical content for a fraction of the price. And at work, we analyze assets for their real value, not their new sticker. Apply that mindset to your purchases. Tip number three, please learn to cook. Cooking is the single biggest financial hack for students. Eating out costs 15 to $30 sometimes. Cooking costs 3 to 5 bucks a serving. If you eat 10 meals a week, that's hundreds of dollars saved weekly. Batch cook on Sundays, one protein, one carb, one veggie. I know it's not sexy, but it's efficient. I know all my bodybuilder friends that are listening to this understand what I'm talking about. And you also get to control your nutrition that way and avoid the impulse spending. Number four, use your campus resources. Your tuition includes more than classes. It's a gold mine of free resources. Most universities offer counseling, tutoring, career advising. There might be some health coverage or insurance stuff, gym access, free printing, even meals at some club events. All of this stuff is paid for, so use it. I've seen students skip free career workshops, then turn around and pay $200 for a resume service. That's so dumb to me. That's leaving so much money on the table. Treat your campus like the asset that it is. Tip number five, stack discounts and cashback. Every purchase is a chance to save. So use cashback platforms online. There's tons of student deals out there that you can find. Pair them with cashback credit cards if you're disciplined enough to use a credit card, or loyalty programs at grocery stores. Always ask for a student discount. Many places offer a 10, 20% off, but only if you ask. And number six, lastly, let's talk about the no spend days. Try 1 or 2 no spend days a week. That's no takeout, no impulse buys, no Amazon. It's a reset that reveals your spending triggers. I do this myself. Pick a day, stick to what I already have, and reflect on why I'm tempted to spend. It's not about deprivation, it's about training that discipline in your head. So let's bring it home with some practical steps that deliver big impact. These aren't theories, they're actions that you can take today. Number one, the 10-minute budget check. Spend 10 minutes every Sunday reviewing your budget. What came in? What went out? Are you on track? This just builds awareness and accountability, knowing what money you have and whatever account that you have, maybe taking a look at your investments when you do that. Sort of like how we monitor positions at the fund. It's not about perfection or being on track every single day, but just being aware of what you have. It's about staying in the driver's seat. That's it. Number two, I added this one for fun because I thought it was super interesting when the idea was shared with me. Textbook arbitrage. I love this. Before buying textbooks, check your library or online portals. Borrow older editions, split costs with classmates, or sell books after the term. A $200 textbook might cost $50 used and sell for $30 later. That's a lot of money saved per book, which adds up really fast. Number three, do not discount the micro income streams. If you've got no time for a part-time job, try the micro gigs, tutoring, proofreading, selling study notes, or even writing content for someone's website. Even $100 a month is, 1,200 a year, enough for groceries or a phone bill. That's just one expense taken off your plate. I picked up part-time work wherever I could on the weekends and weekdays when I was available. It doesn't have to be a glamorous job. just something to make an extra buck every now and then. And the small streams, they really add up and they really do help. Number four, cut the friction. Identify the leaks. Are you spending lots on takeout? Are there unused subscriptions? Are you finding that you maybe impulse buy a coffee and a cookie every single day and that's adding up? Cutting these things don't hurt your quality of life. It enhances it by focusing your money on what matters. Like, do you really need Netflix, Crave, Disney Plus, and Paramount Plus? I know you're not consuming that much content, and if you are, you might have an issue. Like, come on, guys, let's be real about this. Number five, mini savings buckets. So create funds in your budget. You might have a social fund, a travel fund, a textbook fund, and allocate 10 to 20 bucks a month to each or whatever you're able to do. This lets you spend guilt free while staying in bounds. Now, here's the final piece. Like I said, start building financial habits while it's easy. It's way simpler to learn money management when you're young and broke than when you're juggling a six-figure salary, mortgage, family, kids. Check your bank app daily for 5 seconds. Track your spending in a spreadsheet. Read one finance article a week to stay involved in the world, or informed, I should say. Talk to trusted people, parents, mentors about your money, and maybe set small goals like saving $100 this term. These habits compound just like a good investment. And if you don't learn the basics on a student salary and budget, good luck when you start making the big bucks one day. I promise you it's going to be a whole lot more difficult and complicated. Here on the podcast, Trajecta Talks, you're going to notice a theme every single week. We don't succeed by being flashy, we succeed by being consistent. Most people in their 20s chase this appearance of wealth. The smart ones, they're actually building the wealth. And that's the edge that we're trying to create right now. That's what we're trying to get across at Trajecta Talks. Last week, we got some great questions and comments. Please keep them coming. Thank you so much for the engagement. Make sure to hit us up on Facebook, Instagram, or Trajecta University's contact form, or the comment section on YouTube for Trajecta Talks. All the links are in the show notes. I don't think I mentioned the LinkedIn too, so check us out there as well. And here's a challenge for everyone watching. Try one strategy from today's episode, like a no spend day or a 10-minute budget check, and let me know how it goes. I would love to hear your personal budgeting stories. Now, that's a wrap for episode one. We covered the traps that sink students, the mindset shift that creates freedom, how to build a budget, the psychology of spending, and creative ways to stretch your dollars. The big takeaway: every dollar you manage well now is a step toward graduating with options, not regret. And like I said, financial discipline isn't glamorous, but it's extremely powerful and important. That's the edge that we're building here at Trajecta Talks. And folks, if this episode resonated, hit subscribe on Apple, Spotify, or wherever you listen. And if you want to watch these episodes, our YouTube channel has all the full episodes, links in the show notes for that as well. If you are curious about Trajecta University's programs, all the details are in the show notes. And do me a favor, share this episode with a friend who needs it, who may be struggling with their budget. That's how we spread this edge and all this information and help as many people as we can. So with that, thanks so much for being here. I'm Alex Savanovic. This is Trajecta Talks. I'll see you next week. Have a very happy Friday, everyone. Take care.